very good evening, ladies and gentlemen. We are about to start shortly, so could I invite everybody to please take your seats, make yourselves comfortable, and please put your mobile phones on silent mode as well. We will be starting in just a minute. We'll just give all of our guests who are walking in a couple of moments to take their seats and to put your mobile phones on silent. Thank you so much. All right, thank you so much for being here, ladies and gentlemen. My name is Paloma Rao, and I will be your host today. I welcome you all to Zeta's second edition of Democratizing Banking, Zeta's exclusive conference for leaders from the banking and finance industry. It is an honor to be with all of you here today, and we look forward to an engaging evening where only the best come together to embrace the future of banking. So before we begin, we would like to give all of you a big round of applause, ladies and gentlemen, because all of this wouldn't be possible without the entire community. So let's give yourselves a big round of applause, and let's get this evening started. All right. So we know how technology has played a key role in transforming banking around the globe, making it even more critical for banks and financial institutions to choose their next step wisely. So, are you ready to witness the technological revolution in democratizing banking and finance in India, ladies and gentlemen? Yes? All right, so before we get started, I'd like to take a moment to bring your attention to a few things. Keeping up with the theme of the evening, we've made this conference more inclusive so that we can get a chance to interact with all of you. I'd like to draw your attention to slido.com. All you have to do is visit www.slido.com on your phone, key in the code ZETA to post as many questions as you would like for our speakers, and we'll get them answered right here. We're also streaming the conference live on Facebook and YouTube, so you can ask all of your teams to join in as well. Follow our handles, which is @Zeta India, and don't forget to tag us, #ZetaVerse. So on that note, let's get started. Here's presenting our first set of panelists for the evening, ladies and gentlemen, who will discuss a very critical aspect in banking, where the security and user experience are mutually exclusive. So please put your hands together for our speaker and moderator for the first panel, Bhavin Turakia, CEO and co-founder of Zeta, with awards like Young Global Leader and Trendsetter of the Year to his name. Bhavin believes that it is our moral obligation to make an impact that is proportionate to our potential. So Bhavin, excited?
Thrilled.
Awesome. So joining Bhavin on stage is Dilip Asbe, MD and CEO of NPCI. He has played a critical role in managing platforms like UPI and IMPS, and of course India's homegrown card network, RUPay. So please join me in welcoming Dilip Asbe. And rounding out our panel is our next speaker, Porush Singh, Division President, South Asia MasterCard. Under his leadership, Porush has developed and grown functionality of consumer credit and driven profitability for MasterCard. Welcome, Porush. A big round of applause for all of our panelists. And Bhavin, over to you.
Thanks, Paloma. Thank you again, Dilip and Porush, for joining us out here, and all of you guys. It's super exciting to have such an amazing audience for our conference, the second edition, as Paloma mentioned. And this is actually a topic that's, well, dear to my heart, and certainly I'm sure dear to sort of, Dilip and Porush's heart too, which is the whole notion of security versus user experience. Are they supposed to be at loggerheads? India is seeing an extremely rapid growth and evolution in e-com and online transactions. By year 2022, we're poised to be $230 billion worth of kind of online, e-com and online transactions, which in some sense is actually higher than the total volume of all card transactions today. So, fairly sort of, rapid growth in that regards. India also is actually the country with the highest number of kind of second-factor authenticated transactions in the world. As we're all aware, some cases painfully, some cases sort of welcomingly, that in India, second-factor authentication is compulsory. Our regulators sort of required it from the standpoint of ensuring sort of user security. And so the idea for this panel is to discuss this entire topic around, well, whilst user security is paramount, does it really need to be sort of at loggerheads with user experience? So I'm going to kick this off, and as Paloma mentioned, by the way, please feel free to go to slido.com, slido.com, enter the code ZETA, Z-E-T-A, and feel free to add your questions there. Towards the end of this panel, we'll actually take a few questions from the audience also. But let me kick this off from my side. Talking to our esteemed panel here, is that in India, where do you think currently the balance is between ensuring security on the one hand and user experience on the other hand with respect to online payments? And how do you think this should evolve or is evolving? Dilip, why don't you start off?
Did you see the Jamdara, the Netflix? No, I saw it on the weekend. Fairly exhaustive. So, see, I think the literacy issues and awareness in the citizens is creating a little bit of a trouble in regulators' mind, in my assessment. Fairly evident in some of the UPI numbers. While the numbers looks very small, but still there are frauds wherein the consumer, one, for the greed, and second, without fully understanding what is he sharing, right? These are two reasons where he's sharing the details, SMS. UPI, we have created 3 layers of, if the user has to compromise that SMS spoofing fraud, user has to do 3 things. And finally, we came to know that, user is doing all 3 things, right? So one of the bank added the 4th thing, which is the ATM pin during the registration. So we thought, let us go back and check the data, whether that bank is safe or not. So even the over and above those 3 things, the ATM pin also was shared by the customer. While being said that, I think there is a great opening for the low-ticket transactions, so which is the recent circular of the RBI for the low ticket. Obviously, I think still it's not very, from a consumer experience standpoint, it's still not very friendly. We'll have to tweak the way it appears on the circular. But I think there is a starting point. And based on the user life cycle in digital payments, I think if those customs calls can be taken to avoid the second factor, right? The bank's system and the network systems graduated to have that user experience, so that without creating the risk for a common man, are we able to provide the customized experience back to the users? I think that is where the answer would lie.
Thank you, Dilip.
Let's take a step back, right? I mean, we are more connected than we have ever been before. Whether it's buying something to eat, whether it's a Netflix subscription, whether it's going to see a movie, whether it's buying your rail ticket or your air ticket. And this connection sort of has resulted in both positive and negative trends. From a positive perspective, you are seeing a lot more innovation from places like the government, whether you see transit in places like that, right up to, of course, people like yourselves. In this connected world, let's face it, you're also seeing fraudsters staying one step ahead. Because it's not just about networks and banks securing the ecosystem. How many of you have heard about the Target breach? Okay? I mean, the Target breach, by the way, did not happen in Target, did not happen in the banking ecosystem. It happened from an HVAC supplier. So that breaches happen from the weakest link. Initially, I think the concept, and I think RBI was well ahead of the rest of the world to start off with the second factor authentication, the one-time password that we are very used to. But in this connected world, you're seeing two problems. One, you're seeing a lot more drops. Two, as Dilip was talking about, there are a lot more frauds happening. So you're not really solving the problem for many people. Because a lot of them are coming into what you're saying is the first-time digital economy. And for that, therefore, you've got to start going a little bit further in terms of saying, how do you create risk-based authentication systems? Not using a single one, but using multiple different algorithms with multiple different pieces of information where you keep on protecting people. I'll be an example of that, right? I mean, one of the things which all of us, both domestic or international, work on is creating security systems where your fraud doesn't get into catastrophic fraud, which means it gets used here, getting used in another country at the same time. Okay, and many of you remember when the ATM breach happened. That's the kind of things which we all work together on. The way you work it is very simple. You look at a fraud in a country, in an international network, you'll apply to over 200 countries, use AI and data analytics to try and ensure that the ecosystem is protected across with multiple different parameters. That's what's required in the future, because if you don't do it, the biggest threat, and I mean, I've said this in media, therefore, it's not, something which I've not shared before. I believe that the biggest threat in the entire journey to India's digitization is cybersecurity, is making sure that the consumer can get the right experience while doing a transaction or a social experience with complete safety and security. And the second biggest one, which of course we've all been working as an industry, is driving acceptance physically and digitally.
Thanks, Porish, and thanks, Dilip, for that. I mean, I think the perspective is absolutely sort of bang on, and I love the aspect that you shared, that we have to keep in, we have to take into account sort of users who are coming, to sort of a digital economy for the first time. I mean, there's 900 plus million debit cards in the country, and still a vast majority of them are not used online for transactions or even offline for transactions because of security concerns that people have. In fact, that's where I have kind of an interesting perspective on the subject, that we always, and in fact a lot of the sort of merchant ecosystem in India, elsewhere, has been talking about this notion of, oh, you guys are implementing these security measures, but it's going to compromise user experience. And so it's security versus user experience. I actually have a different perspective on this. I think security is user experience. Because yes, you can have a semi-poor user experience today because you're introducing a series of steps. That can certainly be improved. But if you have an insecure experience, the customer experiences that and sees either fraud happening, you've lost that customer forever. To win back that trust is going to take forever. So in our minds, when we sort of constructed Zeta, when we built out Cypher, et cetera, we always constructed from the standpoint that security itself is actually user experience. If a user is not experiencing security, they're not going to transact online. And so, really sort of love that sort of input from you folks. I would love to hear a bit more. I know you guys touched upon this, but I would love to hear a bit more about specifically, NPCI, MasterCard. What are you guys as networks doing to ensure that whilst sort of security is being maintained, that user experience is consistently improved when it comes to sort of online transactions?
No,
and would love to hear about any future initiatives that you planned also that could be interesting.
So with MasterCard here, I can't share a lot of future initiatives. But see, I think the whole UPI journey, be it the Bharat Bill BBPS journey, I think the whole focus is on the user experience in terms of doing the transaction. And we have tried to simplify as much as possible, leaving in the regulatory direction of two-factor authentication. Uh, Now, can it be better further? Yes, it can be better. Now the question is, how intelligently we implement few of the things which we are looking at. So, for example, this, we have been trying to work on the internationalization of UPI, cross-border transactions. We were looking at, implementing this standing instructions by RBI. So, obviously, the user experience is the starting point for us to design the solution. And we are hoping that next 2 months, 3 months time, we should be able to launch these two services back on UPI. And whether we are able to simplify the existing issues what we foresee in the user experience. On the online transactions, obviously tokenization is the way forward, and which is where we are trying to work with a lot of players in the markets, banks, to launch the tokenization services. And I think next 2-3 months time, we should be able to launch that as well. So I think UPI tokenizations are the way we are looking at, we will further improve the user experience. Obviously, the user has to migrate to the smartphone. Without that, it's very difficult to give him the great user experience as far as the point of sale machine is concerned. So once the user is on the smartphone, it's much easier. We are in a position to deliver then it depends on us whether we are able to deliver or not.
Yeah, I think tokenization is a great one. I mean, you need to tokenize it. The only thing is, we're tokenizing the issuance side or the banking instrument. We equally need to start tokenizing on the merchant side. At the end of it, let's face it, we don't get up in the morning. None of us get up in the morning wanting to make a payment. We get up in the morning, we want to get to work, I want to get gas filled in the car, whatever it may be. And therefore, removing the friction of payments in a safe, secure manner is therefore the most important thing from a consumer delivery point of view. And that has been done at the ecosystem point of view. And we've been doing a lot of this. So, as Dilip rightly said, I won't talk about the future, not with Dilip sitting next to me, but I definitely can talk about what we are doing and what we've invested in. Okay, so let me give an example. We acquired a couple of companies in the areas of artificial intelligence, data analytics, and mobile. And the way you use your phone, the way you hold it, the speed you type, the mistakes you make, the pressure you put, they are all unique to you. And that's one of the things we've invested in. We're rolling it out in multiple markets, including India, where you start protecting the consumer from the time they start touching the telephone. And then you use about 200 different variables at the back end to protect again. Because like you rightly said, the consumer doesn't want to worry about safety security. That should be given between the networks, between the platform, between the banks and the merchants. And that's one of the things we've been pushing with the regulator is, therefore, tokenization at the merchant level is key. So you do an end-to-end. Therefore, if there's a fraud, you've got a number for a single transaction which can't be compromised. Second, use brand agnostic solutions. By the way, what I just described in the mobile doesn't apply only for MasterCard. It can equally apply for whether it's a fast ACH UPI transaction, whether it's a RuPay transaction, whether it's a Visa transaction Amex. That's what it's all about. And that's what's really key, where we need to start working about it. Because you know what? A market like India, where it's a mobile-first consumer, cheapest costs of data in the world, the only thing which we can spoil, because the lake is big enough, I mean, it's a sea. We have moved from the time of demonetization from a 98, 99% of personal consumption expenditure being cash to 94%. We should be in multiples of the PCE in terms of digital transactions. If you look at a market like China. So the only way which is stopping us is making sure that as an ecosystem, the consumer has the right experience, which can be delivered through the fintechs, safety, which they're looking out from their banking system, and they have complete faith in the banking system. The networks need to keep on driving that. That's what we need to do together, and making sure there's acceptance.
Amazing. I love what you said, by the way, because that's something that we've kind of spoken about at Zeta. We kind of almost say it the same way, that nobody wakes up in the morning excited that I have to make 5 payments today. Payments are always a means to an end, so our tagline is payments with purpose, and we talk about the notion of accelerating to a world of invisible payments. We think payments should literally be invisible. And I've always seen the security, pendulum tends to always swing in one direction, then swing in the other direction in multiple use cases. I mean, something as simple as, unlocking my phone. would require every single time when I turn it on, would require me to enter a PIN or a pattern, etc. But now with fingerprint and Face ID, it's become such a natural, frictionless movement. I don't have to actually perform an extra step. It's almost invisible to me, yet providing the same level of security. Yeah. And there's no reason why payments can't go in that direction. In fact, some of the stuff that we're working on kind of takes it there. But I completely agree that if the industry is sort of working now meaningfully, I in fact almost I'm certain over the next period of next one to 2 years, this whole notion of, security is causing friction will tend to sort of start dying down because of the steps the industry is taking, whether it's tokenization, whether it's sort of additional, capabilities, including sort of user education, etc. Why don't we actually also, by the way, I don't know if people have posted questions, if you can put up the Slido slide, I'll continue out here, but if you can project if the audience has any questions, they can certainly ask. Awesome, so we have a bunch there. I'll take a question from Slido, and again, folks can just go to slido.com and add a question or vote on an existing question that's out there and post stuff there. So let's talk about the first one. Global tech companies like Apple and Microsoft are trying to kill passwords. Will Indian banking and fintech ecosystem move to a password-less security system? Interesting question. Let's talk about your...
So I'll tell you what. You will move to a secure system, whether it's passwords or something else. I don't think you're ever going to kill passwords totally. I think the question is, how is the password input? And there are different innovations happening around the globe in that. By the way, one of the ones which is pretty interesting, and we did make an investment but never scaled it, was reading your pulse with a band, because your pulse is unique to you. And the only time it doesn't work is if you have a heart problem. So I think that's how, sorry, question? No. So that's where I look at it is, we need to get to a very secure environment without having to remember multiple passwords. Apple and Microsoft, at the end of it, you got to remember, is Dilip talked about it, run on tokenization. So tokenization becomes the base to enable a digital ecosystem. It's not that they have secured the whole ecosystem from end to end. So that's the first comment I'd make. The second comment I make is, and therefore, in a place where you're connected, how do you start removing the friction of having to remember looking at your OTP, drop passwords, etc., and stuff like that? That's where I think the evolution is going to keep on moving towards. Using latest standards, like 3DS 2.0, and creating solutions which can leverage this and have a multi-factor authentication system. So Ritesh can worry about playing with his kid, Sudipto can worry about his next cup of tea, and ordering history, and Kusal can think of what is the next thing he wants to do. But the point is, that's really what it's all about, right? And that's what's going to be critical.
No, I think the key question in this model is, today the authentication of the transaction is performed by the banks, right? So today, what this would exactly mean like a third-party authentication. If the banks are able to debit the customer based on the phone authentication methods, whether it's a biometric face, whatever it is. And I think it's a question to be debated, and I think next 2 to 3 years, I think this question will continue to remain in the Indian ecosystem. Whether the banks are able to trust this third-party authentication provider. Obviously, what they do today is they trust the UIDI, right, for the biometric authentication today, for the financial inclusion. Whether they can trust this OEMs, handset providers, is the question I think the best asked to the bankers technically. I don't think the network standpoint there is a bit of an issue. I think we are fairly open to this. It's a bank's call, in my assessment. The first question.
Yeah, I would just say is, as tokenization happens, it's the bank who will decide whether they will do the authentication, where do they pass it on, how much risk you can take. And that's why I said the risk-based authentication will be key. You can't run it on a single factor or a one-time password or a PIN. It's going to be across multi-factor. Has to move that way. It's moving around the globe, and that's what's... Tokenization just enables that.
Yeah, yeah, and I guess my perspective also would be that, passwords are just one approach. They're a means to an end. There are multiple different ways to authenticate today, whether it's, tokenization, password-based authentication, Face ID, fingerprint, and every system has their pros and cons in some ways. So arguably, passwords also serve their purpose. I mean, I've had this debate with a bunch of people in the past when we talk about security. You know, people talk about, oh, you know, we can do biometric and Face ID and fingerprint. One of the things that at least tends to concern me when I think about security is that you can change a password, you can't change your finger. So, you know, passwords inherently have a property.
But Amazon is now trying with the payments with hand. You read that? A lot of people who kept on criticizing UIDI. Now you see Amazon doing the hand-based payments.
So, so I guess there's pros and cons to all approaches. I'll jump to a question from my side. So kind of an interesting question. Given sort of the whole zero MDR piece in case of, you know, RuPay and UPI, you know, one of the questions that even I've had is that in some ways, is that going to enable networks, the ecosystem, banks, et cetera, to be able to actually invest behind security and user experience and be able to continue to evolve and enhance that? And, you know, what are you guys' take on that?
No, answer is no. Very simple question.
Listen, it's a question
Answer
which...
is no.
Absolutely. You know, this is one of the few times when we've been fighting as an industry. And Dilip and I have been speaking about this, so have you with the competition. Let's understand something very clearly. A, to run an engine, you need oil. So zero MDR isn't going to work. That's first part. But from an India perspective specifically, if you divide India into 3 different periods of time, pre-2012 when there was no MDR regulation, 2012 onwards when the first MDR regulations came into place, and then the last 1 or 2 years post-demonetization. The reality is that debit purchase volumes and transactions grew the highest pre-2012. Add to that the fact that the government reimbursed smaller merchants and smaller ticket transactions with the entire cost of the transaction in the last 3 years, or 2 years, 2 years, right, Dilip? Yeah, it hasn't, we still have the slowest ever growth. So, you know, are we solving the right problem by even fiddling with MDR? That's one. 2, as a country, we had 1.2, 1.3 million acceptance locations till 2016. Just to get to a Brazil level, forget about the more developed markets, you're talking 25 to 30 million merchant locations. You want to drive merchant acceptance, you need oil in the ecosystem. Somebody has to pay. Making it zero hasn't solved it for anybody. And expecting banks to have pools of money to pay is not going to help, because a lot of it, what banks are doing is they in turns are using different facilitators to drive it, technology to drive it. That's the only way you're going to drive it. You physically driving it, there aren't enough machines in the world to be manufactured in that short period of time.
No, I think, of course, there is a decision and position taken by the government on this, but we believe that some sense will prevail over the next few months, because of two things which we have been trying to have a dialogue as an industry with the government. One is, you know, the small merchants versus the large merchant. Today, what the policies has been so much favoring to the small merchants. Virtually, he's paying zero, right? You know, take an example of UPI. Below 100 rupee transactions, scan and pay, it's zero MDR. Somebody who wants to receive the money into his account directly up to 1 lakh rupees a month, he can receive zero MDR. So I think that UPI, whatever we collect from the merchants, is typically from the mid and the large merchants. And they don't mind actually paying 20 bips, 30 bips, because they get a value by the digitization of the payments, right? Because people are not going to carry cash, so much cash to those merchants. Second is, so one is, you know, small merchants have been protected already and the large merchants have been paying this MDR. The second issue has been the worldwide examples. Obviously, many countries did the MDR rationalization, right? With the intervention of the parliament. What is the experience on those countries? I think we should have studied before. I personally don't think a lot of value has been added on the digital payments, and also at what stage the intervention was done. You know, some of the European markets, which are very, very mature market, you know, come to the, where there is no need to invest into the acceptance infrastructure. You know, the customers have already 2 or 3 cards. So those places, MDR has been brought down to 30 basis point, 40 basis point with the regulation, right? But still that 30, 40 basis point exists. So obviously we have given our data, statistics back to the government, and we are having to, we are continuing to have that dialogue with the government to see whether we can, you know, modulate this decision by the government to an extent so that the banks, as you rightly said, and the ecosystem players continue to invest into the payment system. Otherwise, it becomes a commodity, and I personally think that it's not going to add any value. If there is no economic value, why would anybody will invest? And as Purush was telling, the biggest threat we see is the cyber security, right? People will start cutting the corners, and some weakling, as he was saying, the weakling, right? A small startup company or anybody who wants to enter the payment system will take the forward call, and it will create a big issue for the entire chain from that perspective. Yes. That's something you guys have to drive. No, we will. So, and this is what Kushal. I will tell you. There has
it ain't happening otherwise.
No. And we have been telling government that if you want to make it the product cheaper or than the cash, the only way it can happen by the tax incentives, right? And in fact, we are in the process of building that architecture in consult. Black money issue, absolutely. So, obviously the policing has different issues in India, but I'm saying, no, I agree with you. I think there is and in fact, last 1 year there has been meaningful dialogue in this process with the government. Suddenly this has come from nowhere, and obviously we are learning to deal with this as time is passing.
So I mean, that's brilliant points, and this is definitely an interesting topic for the industry, and I agree with you. I think, I've seen this happen sometimes, regulation sort of takes a knee-jerk reaction, but eventually when you present data, statistics, etc., over time, the industry evolves.
I think it's just a phase we are going through. I think it will come back. I think it's just it's a question of weeks and months in my assessment.
Absolutely, and so to your point, I mean, the way I thought about this issue always. Since the time we've been, looking at it and discussing it, is in some sense, what's the real problem out here? The real problem is that we want to enhance acceptance. Now, if you want to enhance acceptance, there's two ways to look at it, and I think that's where the focus has become a bit myopic, and quite rightly, as you pointed out, people have been looking at, Europe reduced their MDR, let's go down to 0 instead of 0.20, etc. But really, is the issue paying 20 bips that's resulting in lower penetration? Or is the issue that there isn't enough incentive for people to put feet on the street to get these people enrolled and get technology and educate these people, etc.? And if that's the problem, then actually...
And actually the issue is people always don't want to look at the cost. Are there no cost on the issuer side? Are there no cost on the acquiring side?
No, there are. And
it's just insane to say that, there are zero cost, and just because customer will move from cash to digital, there is no need of incentive, and
No, but if anything, I think this would end up being counterproductive. I mean, again, some calculations that I see,
so
we're talking about 20 bips on, transaction fees.
Purush should have been smiling, but he's not smiling because he believes that this is the industry issue, and the zero doesn't help anybody.
Absolutely. I mean, the way I see it is, most people that I speak with will tell me that the cost of handling cash is higher than 20 bips.
Nobody accepts in India. Anybody recognizes the cost of cash handling in India.
But there is an associated cost with it, So people don't realize that, if you're not in that ecosystem, even the concept of handling it, managing it, securing it.
This appears to be a large merchant lobby one decision.
So undoubtedly, I think eventually the economics, I always believe in a free market economy, eventually the economics will play out. People will understand this is not resulting in the outcome that we intended to achieve, and eventually things will have to change to achieve that outcome. So,
this is one more issue where Visa, MasterCard, RuPay are together, by the way.
Well, that's amazing to know. And, by the way, from our side, as well as I think the rest of the industry, if there's anything else, we all can do together, I'm sure there's a lot of people out here who kind of...
And that is one thing I think which is required, right? Because at the end of it, the people who've been leveraging this the most have been the technology innovators like yourself. And I think, therefore, being able to get the right innovation, the tech innovation which is required today for driving digitization can only happen, that's why I said, all in the economy. I mean, he's right, I should be laughing, right? But it's not going to happen if you are not driving the right investments to drive digitization, which will help drive tax width, which is what we need as a country, both direct and indirect. And then from there is what you're going to get, the SME credit and everything else.
No, and also the cash, apart from the taxation issue, other big issue is the cash in circulation, right? The cash in circulation where the government is one of the biggest beneficiaries if there is an impact on, if you take out, apart from the actual printing and circulation cost, if the cash in circulation comes down by 3% or 4%, as it's envisaged in the Nandan Nilekani report as well, it helps economy because you are increasing that much speed of money, right? It will change the hand faster than what the cash can actually do. So every 100,000 crore conversion from the cash to digital has as high as 0.5% growth in GDP impact. So I'm saying such a huge benefit is there. So rather the effort should be how do we really attack this from all sides and make it amplify the digitization.
Absolutely. Well, I think that's kind of all of the time that we have today, but this was, really interesting and fun discussion with everybody. Once again, really thank you to our amazing sort of panel for providing their sort of responses, and we have a sort of quick token of appreciation for our panel that I'll quickly hand out. Please, a big round of applause for. Thanks, Paul.
Let's give...
Thank you again, once again, just a big round of applause for an amazing discussion. Thank you very much.
Thank you so much to all of our speakers. That was definitely insightful, and I think it's one of those discussions that could probably go on and on and on. We've captured some great points and some great pictures as well on our social handles. So I'll remind you once again to follow @Zeta India on all of our social channels and share it using Zetaverse. And do continue to keep posting your questions on slido.com. followed by the code Zeta, because we want to know what you think. And like Bhavin said, if there's a question that you favor, you can just give it a like, and we'll focus on those. So I'm going to request Bhavin to come back up on stage for the next talk as he introduces you to Cypher, along with Zeta's co-founder and CTO, Ramki Gadipati, an entrepreneur at heart, and he's also passionate about product engineering. Ramki believes in keeping the commitment to excellence and knowledge going. So, ladies and gentlemen, a big round of applause for Ramki.
So this is an amazing segue into our kind of first presentation. We want to introduce you folks to our product, Cypher. Can we have the deck up there, please? It's again amazing to address all of you as an audience. It's interesting to see sort of a room full of bankers. This is actually the most overdressed that I ever am, and I'm still underdressed in comparison to most of the audience. So Cypher is our second factor authentication ACS service. Really a bunch of series of products that we want to introduce you folks to today, rather quickly in a series of presentations, will blow your mind in terms of what we can achieve with technology. Zeta was formed, Ramki and I started this company in 2015, but we conceptualized it in 2014 and spent a better part of almost a year really researching the space in terms of security, technology, regulation, business opportunity, etc., to figure out where we want to actually operate.